I'm sorry that you failed.
Let's translate that for the average American sitting at home watching this because they have nothing else on TV to watch.
Would you please raise your hands?
Just raise your hand.
Raise your hand. Raise your hand.
Show of hands.
Let me help you. 360 million.
That's more like a charity.
Why would you want to give it away to the shareholders?
0708, the system was outside the system.
Stay out of public policy unless it affects your core business interests.
Should I answer the question? If I was the government, I'd close it down.
You don't have to know a law book from an LL Bean catalog to see that.
American support for unions is at a half-century high. Unions help ensure that workers share in a company's success through better pay and better benefits, control over their schedules, greater stability to their personal and professional lives. Workers at 2 Wells Fargo branches will be voting to unionize this month. Dozens of other union organizing drives are in the works. Wells Fargo's recent scandals highlight the pressure that overworked and underpaid workers at short-staffed branches face. I remain concerned about unfair labor practices and reports that Wells Fargo is geared up in response to the union campaign. Will you remain neutral as these employees vote to organize?
We believe that it's best that we have a direct relationship with those employees, and we do intend to exercise our right to speak with them to make sure that they make an informed decision.
It was an opportunity to show the American public truly a new day at Wells Fargo. I'm sorry that you failed to show that real change is afoot at your bank.
But if you agree with these assessments, would you please raise your hands? Do you believe in its current form, could these regulations negatively impact first-time home buyers? Do you believe in its current form, could these regulations negatively impact those saving for retirement? Do you believe that these regulations could negatively impact our farmers and our ranchers? And do you believe that these regulations could negatively impact small business owners? See, this is the rest of the story. Sometimes we think that we're just beating up on the big banks, but the bottom line is it hits the American consumer where it hurts.
CFPB has stood up for everyday Americans and fought back against abusive and unlawful practices by large businesses, including some of the banks in this room. Mr. Dimon, how much money has JPMorgan Chase returned to customers in the form of redresses and payments at the direction of CFPB?
I don't know the number.
Let me help you. 360 million. Mr. Moynihan, same question.
I don't know the number specifically.
819 million. Ms. Fraser?
I don't know the number either, Senator.
1 billion. Mr. Scharf?
I don't know the number, Senator.
Well, it's over 2 billion. So from just the 4 of you, that's over 4 billion. It's amazing you don't know the number because they're not small in nature. Over $4 billion returned to hardworking consumers in the past dozen years. And yet this critical agency is under constant attack by my Republican colleagues. The lawsuit before the Supreme Court is threatening its very existence. And time again, we've seen why the CFPB is so necessary and why I intend to continue to fight for it. Otherwise, that would have been $4 billion out of the pockets of U.S. consumers. Mr. Scharf, Mr. Moynihan, Mr. Dimon, Ms. Fraser, if you were to lose this safe harbor, would it impact your bank's mortgage lending?
I don't think it would make a difference. We did mortgage lending before this. We do it afterwards.
I think it completely depends on the actual detail on the ruling.
Sam, I'd like to know the specifics to draw a conclusion.
Same as my colleagues, I'd need to understand the specifics more.
Well, I'm saying if it would just if you would lose it, not if it's limited or what. If you would lose it totally, it seems to me pretty remarkable, based on previous testimony of how important the safe harbor provisions would be to banks' mortgage lending abilities, that you would suggest that it would have no effect whatsoever. We're already in the midst of an affordable housing crisis, and eliminating the CFPB and such a rule would have a disastrous impact on the mortgage market and make it harder for families to buy a home.
Since the last time the federal government raised your bank's capital requirements in Dodd-Frank and otherwise, Have you had a depositor run on your bank?
We have not.
Have you failed a stress test?
We have never failed a stress test, no.
Have you ever reached a point where your liabilities were greater than your assets?
Absolutely not.
Well, unfortunately, we've had 3 banks this year that did go broke. They're mid-sized banks. Mr. Dimon, don't you find it ironic? The FDIC is now turning to you and saying, you know our track record, which is blemished at the FDIC. Your bank isn't broken, but we're going to tell you how to fix it. Do you find that ironic? They're going to tell you how to fix it based on standards put together by bureaucrats in Basel, Switzerland, not by the United States Congress. Do you find it ironic that they're telling you this and proposing this? Isn't that kind of like being given gun safety advice by Alec Baldwin?
Should I answer the question? So the major risk of those banks was hiding in plain sight, which is interest rate exposure. That was known to most people who actually could read a balance sheet and read their financial statements, and that's true. I also think
the FDIC said they didn't know. They were busy doing whatever else they were doing at the at their Gomorrah of carnal abuse over there.
I also do think you're making a good point that some of these rules were put in place, and some folks have mentioned here, are pushing business outside of the banking system. And to point out exactly what that is, it's almost 80% of the mortgage business today. It's half of the leveraged lending business today. And it's a bunch of other things which people don't actually see about the plumbing of the system. And I do think it's adding risks about transparency, and a very important thing about the impact.
Let me stop you, Mr. Dimon, because I'm going to run out of time. How is this even legal under West Virginia v. EPA? You have bank regulators without clear direction from Congress who are borrowing standards from other regulators in Basel, Switzerland, imposing them on you without clear directive from Congress. It clearly falls under the major questions doctrine. Why doesn't this violate West Virginia versus EPA? You don't have to know a law book from an LL Bean catalog to see that. Why doesn't it violate the law? Anybody?
Senator Kennedy's time has expired. Senator Warren from
Well, Ms.
Virginia.
Fraser was about to answer.
Would you like to answer, Ms. Fraser? I thought you gave her time. Proceed, please.
I think we very much appreciate your points of view, Senator, on this topic, and I think many of us would concur. While violations of law, we hope, are things that we will debate as a last resort. We would be prepared to do so because it's important that there's clarity in the law and that we abide by it.
Mr. Dimon, you are the CEO of JPMorgan. What about you? If a terrorist group tried to move money through JPMorgan accounts, do you have systems in place to catch it, to report it, and to shut it down?
We have extensive systems in place, but no system is foolproof.
Okay, but you do have systems in place. Work on this every day. And let me just ask all of you, in the interest of time, just raise your hand if you have those programs in place. Good. I see all the hands up. Can you explain why crypto is such an attractive financial tool for terrorists, drug traffickers, and rogue nations?
I've always been deeply opposed to crypto, Bitcoin, et cetera. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems that have built up over many years, know your customers, sanctions, OFAC, they can bypass all of that. If I was the government, I'd close it down.
Okay, well, that's what we're going to talk about. Because last week, federal law enforcement asked Congress to update the banking laws, saying, quote, "We cannot rely on statutory definitions that are decades old to address the illicit finance risks that we face in 2023. And these law enforcement officials specifically called out the use of crypto to finance terrorist attacks. Now, the laws clearly need to be updated, but crypto lobbyists are working overtime to block any legislation. They claim crypto is special and it shouldn't have to comply with the Bank Secrecy Act, even if that means letting terrorists and drug traffickers and ransomware criminals and rogue nations move billions of dollars totally unrestricted. So I'd like to go down the line here. Maybe I can start with you, Mr. Scharf. Do you think that crypto companies facilitating financial transactions should have to follow the same anti-money laundering rules that your bank has to follow?
Absolutely, Senator.
Okay, I like absolutely. Let's go on down the line. Mr. Moynihan?
Absolutely. If they
Okay.
Absolutely,
All right.
positively, certainly.
Unanimous, absolutely.
Absolutely.
Absolutely. Absolutely.
Absolutely.
All right, it's the word of the day.
Mr. Moynihan, back in 2008, the Bank of America, your bank, didn't have enough capital to cushion the bad investments decisions that you made, and you had to be bailed out. And then in 2023 of this year, the Silicon Valley Bank didn't have maintaining enough capital and had to cost over $20 billion from the FDIC. So let me ask you, should we believe you that you have the Batman, we got this kind of an issue? Or should we able to have intervention to adjust this?
Well, Senator, I think since the financial crisis, this body, along with Congress and the President, passed the Dodd-Frank Act, and there have been, which changed the capital rules. There was an adoption of further Basel standards. On top of that, there's been 13 stress tests, if I've got it right, each one of those more severe. And so even in the last 5 years, we probably have 10, 15% more capital required for under those tests. So I think there's been a significant amount of regime change made. The question is, for the institutions that failed early this year, is that none of them are captured with that scrutiny. And our view was that as a group that had to go in and do two things. One, try to keep them alive long enough so it could be resolved. And secondly, this week, soon we'll cut a check of $2.1 to $2.2 billion to the FDIC to pay for the cost of the cleanup in our company, along with all of us.
Well, if you felt that we all supported those kind of changes after the crash, and then how come we have what happened at the Silicon Valley Bank now some 15 years later, and if there wasn't the kind of intervention, they would have called another kind of a crash. So have we got it right yet? Should we have to make any more changes? How are you okay with this idea that a relatively small bank, especially compared to the size of all of you in front of us today, could cause a crash system-wide, unless that the president had to quickly intervene and make sure that we address this? Any changes? Anything else? Or that it's okay to worry that a small bank could actually imperil our entire financial system?
I think 4,000 banks have failed over the course of time. That's what the FDIC was created to help. And they've been resolved as a
But have any of them almost crashed their entire economy or the financial system?
In 07, 08, the system was outside the system in addition to that. So many of the people up here were not bank holding companies at that time. And that was the invention of the broader purview of the banking regulatory net, the invention of the FSOC we've talked about, the invention of stress testing, the invention of all these things and Basel rules to move to a advanced methodology using models and other things to measure risk as opposed to standardized methodologies, which is what we're going back to now. All that was made to change the system. Silicon Valley didn't threaten the U.S. economy. It could have been resolved, and it was resolved.
Well, why did the president act so swiftly if there wasn't such a concern? That's amazing that you can get on the phone and act so quickly for that kind of money. If there really wasn't such a significant risk. I mean, I wasn't read about the other 4,000 banks that crashed that required the president to react in such a swift manner.
You'd have to ask the people. We didn't think that all that could have been resolved differently. Many of us that got involved with the First Republic transaction, the deposits we put in, but you're going to have ask the other people why they did what they did. Like, it's not us.
Okay, so, but again, so no changes are necessary, despite now that we seem to have this enduring kind of a risk that bad behavior or bad investments could actually crash, our whole financial systems.
There were specific things that happened in Silicon Valley Bank that should be addressed by regulations. And the most important one is excessive interest rate risk. That's got nothing to do with Basel III, the issue here. And I think the American public should know that banks pay for the FDIC. That's not government money. That is a mutual company, and I would love to take it over and take it off your hands and manage it ourselves.
With all due respect, Mr. Damon, I really think it really matters, who's paying for it, but the fact that anyone has to pay because of these choices are necessary. Now, my chairman, could I have, and actually, Mr. Dimon was next in my question.
Quickly.
Oh, outstanding. All right. So, Mr. Dimon, you claim that the capital requirement and that will increase costs and reduce lending. Chase done $5.7 billion in share buybacks and $9 billion in dividends so far this year. So wouldn't it be easier just to kind of hold on to a lot of that money and lend it out? Or why would you want to give it away to the shareholders and other things like that, or buying back your own stock?
It is the shareholders' money, and we do all the proper lending we can and should do. It will reduce the profitability to a bank of doing the business, and I don't think you should be asking people to do stuff that's unprofitable for their shareholders. That's more like a charity. There's tons of that. Happy to talk about that in more detail.
And my question is, can you briefly respond to that? Would this proposal only have a minimal impact on Wells Fargo's lending?
Well, Senator, we are going to be commenting to the Federal Reserve. We do think there are a series of asset classes, when you look at the increases in capital that are proposed, would affect both the availability of credit and the pricing of credit in the marketplace. And additionally, as we've seen in other asset classes, when regulation like this has taken hold, you can see substantial migration outside of the regulated banking system.
If you have the same capital requirements increased by 20% to do the exact same activities you did yesterday, you have to get a higher return, and that higher return will be borne by the customer base, or you'll have to leave the business. And either one of those is not good for the customer base, and it applies across the board. In fact, the idea that this doesn't trickle down through the banking system overall, we provide services to a lot of those smaller banks. Those costs of the services will go up to them. And so it has much more an impact than people think.
And this is a graphic compiled by my staff, which lists the ways in which your financial institutions have gotten involved in major political debates of the last few years. Things like the Georgia voter identification law, things like whether to lend to fossil fuel-based companies, things like guns and abortion. I should say, of course, that we all have our opinions on matters of public policy. Senator Cortez Masto and I disagree. But the difference between Senator Cortez Masto and I and all of you is that the people of our states elected us to do public policy. Nobody elected you, and so my counsel and my line of questioning is going to be very focused on this particular issue. Stay out of public policy unless it affects your core business interests, because if you don't, it's going to be a lot harder for us to see you guys as neutral arbiters and neutral actors in the American financial system. It's going to be much easier for us to see you as political actors. Now, I want to focus on a couple of issues just because I think they highlight the absurdity of this, and that will lead me to my questions. Georgia in 2021 passed an extraordinarily moderate voter identification law. 6 of the 8 of you immediately issued statements criticizing the state of Georgia to that effect, or at least your institutions issued statements to that effect. Now, I should point out that New York has a voter identification law, a much more stringent voter identification law than the state of Georgia. Did any of you issue statements criticizing the state of New York for their voter identification law? Show of hands. Let the record show that none of you criticized New York for a more stringent law, but you jumped into a culture war over Georgia. I can't possibly understand why. Something that's more concerning to me, because it affects my constituents in the state of Ohio, is a lot of your approach on energy policy. We have seen over the last 18 months the consequences of reducing American energy independence, It empowers very bad people all over the world. It also impoverishes and immiserates some of my constituents and destroys their job. I'm not picking on you, Mr. Moynihan. I think you're the only bank that has a red X on every single issue. This is true of most of you. But I'm going to ask you this question about energy policy. In 2015, Bank of America committed to cut off lending by 2025, that's just a couple years from now, to companies earning 25% or more of their revenue from thermal coal mining. Now, that decision and some other decisions that have been made are raising the price of energy on Ohio consumers and imperiling the jobs of those who work in the energy sector. Why are you doing this? Did the government make you do it? And if not, why are you doing it?
Senator Vance, just to be specific, that was a statement about mountaintop removal policy. I grew up in southern Ohio where it was called strip mining back then.
Sure.
My next door neighbor was engaged in the business. And the statement we made was we would not continue to fund people who would continue to take the tops off of the mountains in the Appalachian Mountains and turn them into mines. And that was based on our assessment of the risk at the time.
So you guys have taken a number of other energy policy decisions that raise the cost of energy in American consumers. You guys have committed to a net zero standard by which effectively there are no net zero carbon emissions, and you've held your clients to that standard, saying that they need to become aligned with net zero, and we plan to be the advisor of choice to our clients in this transition. So it's not just that particular decision, Mr. Moynihan, and again, it's not just Bank of America.
But I hope you all will really answer the question. Nothing in these proposals will stop your banks from lending to small businesses or first-time home buyers. Because if the proposals Basel III endgame, who in America knows what Basel III endgame really is? Let's translate that for the average American sitting at home watching this because they have nothing else on TV to watch. It is simply requiring more capital on the sidelines, which then means fewer dollars to lend to small businesses, first-time home buyers, car loans. So the actual impact of a higher regulatory standard is fewer dollars to lend to Americans who need desperately to be engaged in the process of achieving the American dream that is typically defined by having access to capital. Oh, if you work really hard, keep your life in order, you can have a good quality middle-class life. But if you want to actually experience wealth in America, you have to experience the benefits of profit or equity. Equity comes from having capital. Having capital typically means you either have it because you were born with it or you have access to it because you have an idea or a vision that will make your community or this nation better.
Would you support a national 36% interest cap?
Senator, I appreciate your thoughts on this one. I think we would be concerned about setting a flat number without really understanding what the impact could be in different inflationary environments.
Mr. Moynihan?
Senator, it's not really relevant to us. We don't engage in prime lending. I think, as Mr. Scharf said, it's a question of balance. What would it push outside the system? What would it make not available? And I think, but it's just not a relevant question for us because we don't have rates that high.
Well, I guess in a general sense it's relevant because most of the people who use this adversely are payday lenders and rather dubious operators who will induce borrowers into arrangements which are something you wouldn't even tolerate. So I think that we've reached a point now after several years of questioning you all, and I'm not picking on you, Mr. Moynihan, to come to a conclusion. And I think the conclusion is it should. Mr. Dimon, please.
Yeah, we don't engage in that. I completely agree with your intent. I think there should be a focus on payday lenders and check cashers and certain things like that. And we'd love to help you design it so it accommodates the intent without any bad consequences. There are some people who make very small loans who it may stop them from doing that and actually push people into payday lending.
I want to ask you about the Safer Banking Act. Legislation recently considered by this committee on cannabis banking. Many of your banks have lobbied for this bill, and the American Bankers Association, of which you all are members, supports the bill as well. I'm going to ask you to raise your hand if you support the Safer Banking Act. None of you support the Safer Banking Act. I'm going to ask you a question. Raise your hand if you support the Safer Banking Act.
Senator, we all support the intent of it. The problem is it doesn't fix the problem, and that's it. So don't take our non-essentials.
Let me ask my next question. Please raise your hand if you believe passing the Safer Banking Act will reduce the racial wealth gap. So this is interesting, and so we should have some conversation about this. The American Bankers Association, of which all of you are a part, writes that this legislation will provide, quote, legal and regulatory clarity for banks, and it would help facilitate access to financial services.